Hey everybody, Jimmy here. Welcome back to the channel. So in today's video, we're gonna do something a little bit different. So today we're talking natural gas, and as we all know, the natural gas report comes out on Thursdays, and it comes out at 7:30 Pacific time, 10:30 Eastern time, and there's always an immediate response. The natural gas futures /NG either rockets up or drops like a rock down. We've all seen it happen. It's a lot of volatility. A ton of volume typically comes in, which is great to play off for the rest of the day. So traders will watch for this report. Once it's out, things get wild, and then you can start placing trades and making your money for the day. So in today's video, I'm gonna show you the natural gas report. I'm gonna bring it up, we're gonna break it down, I'm gonna show you the numbers, I'm gonna show you why today's report resulted in /NG pushing up really hard. Then in addition to that, I'm gonna give you two strategies that you can use to trade against the natural gas report so that you can profit consistently on Thursdays. And I'm actually gonna take one of these strategies and employ it and put on a trade next Thursday, and I'm gonna capture that trade live and show you exactly what I did. I'm gonna talk about the strategy today and then practice it next Thursday. So turn on your bell notifications so that when that video comes out, you'll be able to be notified and then you can come check it out. So with that, let's begin. Okay, I've got /NG right here up on the charts. I've got the 5-minute chart up just because I want to show you a couple examples first to start the video off on where the natural gas report occurs and how you can visually see it because it's such a big event every Thursday. So I just labeled it right here as the nat gas report with the little arrow, and you can see on this 5-minute candle, that was the natural gas report, and if you look at the time down here, right at 8:30. Now 8:30 is mountain time where I'm located, so if you're on the East Coast, then obviously that's gonna be 10:30. If you're on the West Coast, that's obviously gonna be 7:30. So just depending on your location, it's 1 hour into the market open. So you look at this, you see huge volume, huge volatility, everything just takes off. So where that would be reflected is in the correlating ETF, and that's gonna be UGAZ. So when I flip over to the UGAZ chart and we look at it on the 5-minute time frame, you can see sure enough right here at 8:30 this morning, the natural gas report came out, it was favorable. So what happens? You get this huge push to the top. So it's key because now you have a lot of the pieces to the puzzle for a good trading day. You have volatility, you have volume, and you kind of have now an indication as to direction. So you can use that to place some trades. And in this video here in just a little bit, after we talk about the natural gas report, I'm gonna show you two strategies that you can use to play off of this report at 8:30 or 7:30 or 10:30, depending on where you're located. Now, if I break this down to the 1 minute, just to take a peek at this, you can see how violent and quick it is. So right here at 8:30, the biggest movement literally happened within one 1-minute candle. So we had this pullback, the report came out, and it just blew the lid off everything. That happened, and at 8:31, that one was over. Then you can see it pushed way back down, came right back up, and then it kind of drifted higher before correcting itself and giving you the pullback. So I just wanted to emphasize how quick and how powerful it is because most of the move actually occurs on the 1-minute chart, on one 1-minute candle. It's very fast. So I'm going to flip back to the 5-minute chart real quick, and then what I want to do now is actually take a look at the natural gas report and kind of break down a few of the numbers. So if we flip over here, this is the actual natural gas report that comes out every week. And what I'm going to do for you guys, if you haven't looked at this report before, it's really interesting because it gives you historical perspective. It talks about what's currently happening, and you get an idea for maybe why things are moving the way that they are, and you can kind of identify trends to maybe look for in the future. So I'm going to leave a link below. You can click. It'll take you directly to this report for today, Thursday, August 8th, so that you can read over that and just kind of try to make sense of the numbers for yourself. And then if you want, you can see right here, and you'll have it in the link below, but this .gov address where you can always go to read about the natural gas storage reports. So right here, the way that this report is broken down is it's based on underground storage in the lower 48 states. More volume of storage typically is more favorable for a report and sends the futures for natural gas higher. Now, if storage shows a decline, then what can happen is you can get the opposite. You can get a push down in /NG. So on high storage reports that beat the previous report, you'll get an explosion and a move up on UGAZ. And then on weeks when you don't have that and you show a decline, you're going to show a move up on DGAZ, which is the inverse ETF. Now, obviously this is going to change based on weather. In the hot months when people are cooling their houses with natural gas, you're going to have stuff that comes up. In the winter when people are warming their houses, when it's very cold out, you get changes and fluctuation in storage units. So we're going to go ahead and look at this right now. And as you can see in the lower 48 states, it breaks it up into regions, which is kind of interesting. So if you look, you can look at, say, like where I am, mountain region on 7/26 of 19. In billion cubic feet, the BCF is the measurement for it. There were 156 billion cubic feet of stocks in storage for natural gas for the mountain region. Now, for 8/2, you can see that increased to 161, so that's favorable. Now, what's interesting to look at is, say you look at the Midwest, 677 versus 701, so you got a beat there as well. Now, it's interesting, you have decreased amounts of storage in the mountain region, and it's interesting looking at the net change in the implied flows. It makes me curious about cooler parts of the country versus warmer parts of the country and their usage, so that all plays in as well. But as you go through these, you can just clearly look and see what happens. So we're the East region. You can see that we had a higher number for August 2nd, which beat that. We have the Midwest, 701 versus 677. We had a beat there. Mountain had a beat. Pacific had a small net change of 2. South Central had a net change of 7. So total net change was an increase in 55 billion cubic feet, which is a staggering number in my mind, of natural gas storage for the stock. So that shows you why this was favorable and why it caused such an increase in the natural gas futures this morning when this report came out. So then over here, under historical comparisons, you can look at the year ago, or you can look at the 5-year average. So it's also kind of interesting because a year ago for this same time frame for the mountain region, so right now it was 156, increased by 5 to 161. If we look at a year ago, it was 148. So you can show an improved storage. And then over the 5-year average, it's been 177 and showing net change of -9. So it's kind of interesting to be able to look back, over last year compared to this year and look at how much is being stored. So down here, then they give you a nice summary. So it tells you that natural gas storage was 2689 BCF as of Friday the 2nd, according to their estimates, and then represents the net increase of 55 billion cubic feet from the previous week. The stocks were 343 billion cubic feet higher than last year at this time, and 111 billion cubic feet below the 5-year average, which is really interesting. So the one thing I'm going to look up and take a peek at, which I think is the missing piece for me on this report, is do we have more storage because we're not using as much, or do we have more storage because we are using more and therefore we need to increase production to store more? I'm going to find that out. I'm going to get back to you guys on that. That's the one thing that's not clear to me on this report right now. If any of you know, let me know. Does storage get increased with increased demand, or does storage increase with decreased demand on natural gas? But then you get a nice chart down here. You see the 5-year maximum and the 5-year average, and then the lower 48 on this in billion cubic feet. So you can kind of see where we are right here in the lower 48. Comes in just under 2,800 billion cubic feet right now. And then you can also look at the 5-year average. So we are below the 5-year average, But today's report was favorable, as we can all tell, because we had a huge spike in the futures for natural gas /NG. So this is the report. It's fun to read and learn about because it just reveals sort of how things are going in terms of natural gas storage, which directly affects the futures, which we are all trading. So it's interesting to put all these pieces together. And as I continue to learn about this and how things exactly work, I'll keep putting out videos about it, and we'll kind of all learn about it together, because I'm by no means an expert on natural gas storage. So, and if you guys are, let me know if I was incorrect on anything that I was reporting or any of my assumptions. I would really appreciate that. So I'll put a link to this below. Feel free to click that. Now let's get to some of the good stuff. Let's trade /NG based off this report. Let's talk about the two strategies now. So in here, I'm going to bring myself back down to the bottom. So what we want to do is figure out a strategy that would allow us to take advantage of this gigantic spike. Now for my example right now, I'm going to go down to the 1-minute chart, and I just want to show you my thoughts on this. So in the Thinkorswim platform, it's very nicely set up. You can create what's called a bracket order. And if I open up my active trader window and I come down here, you can see I have a selection for different brackets. So let's just say I pick this one. It allows me to put in a stop limit order right here and a limit sell, like a stop limit to sell. So in one click, I can issue where I want to enter a trade, and then once that's set, it'll put out a target to sell my shares and a stop loss to protect myself against risk on the downside. So I can get all of that implemented in one bracket order, and that's super helpful. So I would do that through the active trader window, and then once I have the bracket set up and selected, I can decide when I want to go ahead and jump in and then place that order down here on the ladder down here. So looking at it right now, and obviously this is hindsight, so it's always 20/20, but let's just say we're watching UGAZ. It's Thursday, it's 7:25, and we're waiting for the report to come out. And you can see this pullback right here. Now it's 8:29, you've got your bracket filled out, you know how much risk you want to take on. If you don't know how to calculate your share size based on how much risk you want to take in dollars, I'm going to link a video below. It's another video on my channel that I've shot that talks all about risk management and how to calculate your share size so that you don't get too heavy or too light on any one position based on how much you're wanting to risk. So once you have that figured out, my thought on playing UGAZ is, in this example, we had a high point here and then we had a pullback. So I would look at this high point, and that's $12.14. This candle next to it, $12.14. So what I would do is fill out my bracket order, and I'd place an order a few pennies, maybe 2 cents above, $12.16. If price action breaks that level, I want to get long and have a stop loss in place. And then what I would do is put a target to sell out so that it's up near the top VWAP. So I would have my target maybe around 1240, 1242-ish, right in there. So once this comes out, you can place the order at 8:29, and then you're just waiting. If your assumption is that natural gas is going to go up, you can place this trade on UGAZ and then wait to see what happens. Now the other side of this is, if you think it's going to go down, you can look at DGAZ, but you can do the same thing on DGAZ. So what you could potentially do in this situation, so here you can see we got the big drop. Now, if we were setting this up and we wanted to take advantage of whether natural gas is going to go up or down, we could place that same bracket order. Let's say it's 828, 829. You could place that bracket order back above this high. So you could place it on DGAZ, and you could place the same bracket order on UGAZ. And then you're waiting for the report to come out. Now, if the report comes out favorable, then what you're going to get is you're going to get the huge pop on UGAZ, and if it's not favorable, you're going to get the huge pop on DGAZ. So one of the orders will be activated, and likely the other order won't be activated. So it's kind of a way to play both sides, but because you have that bracket order in place, you're protected on the downside with the stop loss, and you have a take profit target. So if it rips high and you're not able to move quickly enough, hopefully it will execute your sell up wherever you decide to place it. So it's a way of taking advantage of both sides. So one order should be activated, the other one shouldn't. And in today's scenario, if you would have placed a bracket order on UGAZ and on DGAZ and then waited, and at 8:30 you got your response, you would basically just go cancel the one that wasn't activated. So I would flip over to DGAZ, cancel that order, and then come back to UGAZ and just watch it and either take my exit where my target was set or move it up a little higher if I'm feeling confident. You can kind of play with it however you want, but you could take advantage of that 1, 2, 3-ish minutes and then be done trading for the day based on this strategy. So that's strategy number one, playing both sides with a bracket order so you have protection and taking advantage of the high volatility, high volume 2 to 3 minutes that you get after the report comes out. So strategy number two, let's jump into this a little bit. This is a little more generalized strategy, and this is something that I was historically looking back at UGAZ, DGAZ, and the natural gas futures. And the interesting thing that I found, I'm going to go back to the 5-minute chart, and I'm going to go ahead and do maybe 90 days here. So today's the 8th, so let's just start on the 8th, and let's just look at that and see how things are looking. So you see we got that huge push up, and you could have taken advantage of that. Once you get a move in a direction, so NG pushed up, so now you could say to yourself, I'm going to use that to help dictate the direction for the rest of the day. So once you get this big pullback and you start to see things curling around, it's interesting, and it could be a play to go long there and hold for a majority of the day. Now you can see we got this breakdown. So you could hold until you get a push back below this other moving average right here, which is the 15 exponential moving average. Once you get a break back below there, like on this candle, as it's starting to push down here, you could then consider an exit or wait for it to pull back and exit here. So that could be one approach. Now I want to show you, if we go back to the first, you can see the report was not favorable and pushed down. So what I would do is I would go ahead and flip over to DGAZ to look for the long position. But as you can see, if you let this dictate how you wanted to hold or what direction you were biased for, you'd wait for the pullback, and then as it started to roll back over, you would then take it and you would hold it for a period of the day until you got across back up and you were holding above the 15 exponential moving average. Once that starts to happen, you could exit your trade. But you would be in from here down to here. So you would have, that would be your profit margin. And if we look at DGAZ, and let's go back to the first and just see what we think here. So there's the 8th. Let's go back to the first. So on this, if you would have waited for this to push up, so now you say, okay, DGAZ is the one I want to play. You wait for the pullback, and then this candle starts to break the high of this candle here. And once that happened, you could go long, and then you're just holding. And you're just saying, okay, because it pushed up on DGAZ, I'm going to go ahead and use that to dictate my direction for the rest of the day. And on this, you can see it worked really well. This pointed to up, and up was the direction for the day. If we go back to the 8th, and we said the direction was down, I got a pullback, I got in, and now the direction has been down. So it's really pretty handy in picking the direction for the remainder of the day. Now obviously it doesn't always work, but so here it is on UGAZ, the actual way it would play out. It pushed up, you identified that UGAZ is moving up, so when it pulls back, you get long here, and you're holding for the remainder of the day, or for a good portion of the day. You know, maybe you don't trade past 10:30 Mountain Time, or whatever time you choose not to trade past. You could then say, I exit around that time, and you'd have, a pretty decent gain right here. So it's another way to play it. It's more generalized than placing the bracket order right before the report comes out. Now, all of this has risk, but I think if you use bracket orders, you can really help protect yourself and keep a very small stop loss so that the downside, if it does surprise you, it's not a big loss. So that's kind of how I want to break that strategy down. I'm actually going to go back. Let's go to 7:25, which is another Thursday. And let's do one more just to see what it looks like. 7:25 is right here. Okay, so 7:25 was down, so we need to go to DGAZ. So what we could have done is DGAZ at 8:30 pushed up. We got the pullback, so we could have got long in here and then just held it for the remainder of the day, or part of the day, whatever you choose to do, or until it pushes back below your 15 exponential moving average. So it's kind of a way to just decide, okay, I'm thinking the direction is going to be up for a while. So when I get a pullback, I want to go long and take advantage of the next couple cycles to the upside. Then you can dump the shares and hopefully call it a day. So those are the two strategies I want to show you. So the bracket strategy, right when the report comes out, and then sort of the more generalized directional strategy of using the natural gas report to dictate and determine the direction of UGAZ and DGAZ for a part of the day or the remainder of that trading day, so you can take advantage of moves to the upside. So I hope that was helpful. This was a little different video on natural gas. We're breaking down the report, we're talking strategies, and next week on Thursday, I'm going to record my trade live so that you can see me put on this trade. And the strategy I'm going to use is the bracket strategy. I'm going to set up the brackets a couple minutes before the report comes out, and then when it comes out, you're going to see one of my brackets get activated and the other bracket I'll go cancel because it won't be activated. I'm going to have stops on both really tight so that risk is minimized, and then I'm going to set a target that's up near the upper VWAP, and we're going to see if we can hit it. So turn on your bell notifications so that you can get notified the minute that video comes out. And if you're new to the channel, consider subscribing, and we'll see you tomorrow.